Hey everybody, Andy Tuttle here with the Tuttle Group and this week's market update. Now we all know bonds have been having a lot of problems lately, and we've seen interest rates go up from the low sixes to the high sixes in just a matter of a few short weeks. This week is not starting off any better, and frankly, we have got a monster week of reports. You could call it a monster mash here the week of Halloween. We have got Treasury Auctions, price index reports, the JOLTS reports, ADP private unemployment numbers. We got pending home sales, personal consumption expenditure, initial jobless claims, and then it all ends with the BLS jobs report. Now, we have gone over this for months, and we have seen a track record of these reports not being accurate and having a big revisions later. And I personally, even though there are a ton of opportunities for rates to improve this week based on what the data is predicted to show, I just don't think that we are going to see any reports that show weakness in the economy or the jobs market before an election. That's my personal opinion based on the track record. So although there are opportunities for rates to improve this week, I just don't see that happening. I see them waiting for big revisions next month. And then, of course, next week we got the Fed meetings, but that'll be after the election too. So power-packed week, a monster mash of reports, but I just don't see that there's going to be huge opportunity based on what I think they're going to do for rates to improve this week. But of course, like we've been saying, it's going to be a wild ride and a bumpy ride. So here's a couple of reminders. The main one is the 2-1 buy down inflation buster. If you are out there looking to buy a home right now, sellers are going to be getting a little nervous too, right? Because rates are going back up. Their homes are sitting. We're seeing price reductions. Take advantage of that. Get with your fantastic realtor. Negotiate seller concessions. Go for the inflation buster 2-1 buy down to get a 2% below market rate for a short time, the next couple of years, to build a bridge until rates do drop into that 4.75, 5.25 predicted range, what I think into 2025, mid 2026. So you can still get a great deal on a house. It still can make sense for you. If that's what you need to do is buy a home right now, these are the ways to get around and look at it. And if you haven't gotten your target rate or strike rate yet on a refinance and you bought in the last couple of years, now is the time to do it. Go to loanwellnesscheck.com and find out what that rate needs to be for it to make sense for you to refinance. So when we do see a rally again, even if it's short-lived like this last one, boom, you can jump on it immediately and not miss out on an opportunity that may come and then go away for the next several months or maybe even up to a year. So be prepared, plan ahead, and know that we're in your corner every step of the way. And we want to be a servant to you and take great care of you. And we're always just a phone call away if you need us. Happy hunting out there. Thanks again for watching. We'll see you next time.